Right now, somewhere in a home office in Chicago or on a trading floor in Miami, an investor is staring at a screen. They're looking at two assets that have symbolized wealth and security for millennia: gold and silver. And they're asking themselves a question that's less about charts and more about psychology. Are you building a fortress, or are you loading a catapult? Do you crave the silent, immovable weight of permanence, or the electric potential of a catalyst waiting for its spark? Because in the heart of 2025, that's the real choice between gold and silver. This isn't about swapping one for the other. This is about understanding what each metal whispers about the world right now, and, more importantly, what you're listening for. Let's be clear, gold isn't just a metal, it's a myth. It's the final answer in a financial panic. It's the asset that doesn't have a CEO, doesn't pay a dividend, and doesn't care about the Federal Reserve's mood on a Tuesday afternoon. It's the castle. Its walls are high, its moat is deep, and its primary job is to not fall. In 2025, that castle is under a peculiar siege, not by armies, but by digits. Central bank digital currencies are moving from white papers to pilot programs. The digital euro, the digital yuan are no longer sci-fi. And in the shadows of this, gold is doing something quiet and profound. It's becoming the ultimate non-digital, non-hackable, sovereign-proof ledger. Countries aren't just buying it, they're repatriating it. Germany, the Netherlands, Turkey, bringing physical gold home from vaults in New York and London. It's a silent vote of no confidence in the system's plumbing. When trust is digital, physical weight becomes its own kind of radical trust. But here's the unusual fact about gold in this moment. Its biggest demand story isn't jewelry in India or bars in Switzerland. It's a circuit board in Taiwan. Over 300 tons of gold are consumed annually by electronics. Every single advanced microchip, the kind powering the AI revolution you hear about every day, uses microscopic gold wires for its connections, because nothing else is as efficient and corrosion-proof. The AI boom is, in a literal, physical sense, a gold story. The fortress has become a fundamental component of the future's brain. That's a new kind of demand that doesn't fluctuate with wedding seasons. Now let's talk about silver. If gold is the castle, silver is the key. But not just any key. It's a key that also conducts electricity, kills bacteria, and turns sunlight into power. Silver isn't resting on history, it's writing the next chapter of technology. And 2025 is the year the plot twists in a way few are discussing. You've heard about the solar demand. Gigawatts, panels, green revolution. That's mainstream. Here's what isn't: the silver intensity paradox. As solar technology gets better, companies are desperately trying to use less silver per panel to cut costs, a process called thrifting. They've succeeded, reducing usage by over 90% in the last decade. But here's the catch that defies logic. Total silver demand from solar keeps soaring. Why? Because the installed base is exploding so fast, even the tiny amount in each new panel adds up to a mountain. It's like trying to save water by using smaller cups, but then inviting the entire world to a party. You're using less per serving, but you need a billion more cups. The deficit isn't shrinking. It's being baked into the infrastructure of our energy future. Now, let's step into the truly unusual. 2025 marks the first year where a specific, obscure technological threshold is crossed: quantum computing. While still in labs, the most promising qubit designs, the heart of a quantum computer, require extreme cooling and shielding. The best material for that shielding? High-purity silver. We're not talking ounces for prototypes anymore. Major tech consortiums are quietly securing long-term, off-market silver supply contracts for R&D facilities, not for today's production, but for a production line that doesn't technically exist yet. They're not buying a commodity, They're buying an option on the next computational epoch. Then there's the medical front, post-pandemic. Hospital-acquired infections are a silent crisis. Silver's antimicrobial properties are leading to its integration into everything from HVAC systems in new hospitals to the paint on the walls. A silver-coated hospital room isn't a luxury, it's becoming a liability reduction strategy. This isn't jewelry demand, it's a structural, regulatory-driven demand woven into building codes. But the most fascinating, least-known pressure point is geopolitical, and buried in plain sight. Over 50% of the world's silver is produced as a byproduct of mining for other metals, like copper, lead, and zinc. So the story of silver supply isn't really a story about silver mines. It's a story about copper mines. And in 2025, the global copper pipeline is choking. Decades of underinvestment, soaring political risk in South America, and astronomically complex permitting in North America mean big new copper projects are delayed or canceled. No new giant copper mine means no new giant stream of byproduct silver. The silver supply is tied to the fate of a completely different industrial metal, creating a supply vice that no amount of silver exploration can easily fix. Let's talk about the paper versus physical game, because here's where 2025 gets a strange flavor. The London Bullion Market Association, LBMA, and the COMEX in New York are the twin pillars of paper, gold, and silver trading. For years, the registered inventory, the silver actually available to deliver against futures contracts, has been trending down. But in early 2025, a subtle technical change occurred. The escalation in lease rates we saw in late 2024 didn't normalize. They stabilized at a permanently higher plateau. This is the deep plumbing of the market. It means the cost to borrow physical silver between banks is now structurally more expensive. It suggests the deep institutional pools of lendable metal are shallower than they've been in a generation. The music for the paper game hasn't stopped, but the band is now charging a much higher cover fee to keep playing. Now, frame this for the American investor. You're looking at your portfolio. Gold is your insurance policy. In 2025, the premium on that policy might feel high, but the list of what it insures against has grown. Not just inflation, but digital currency uncertainty, geopolitical bloc formation, and systemic financial friction. It's the anchor. Silver is your speculation on necessity. It's a bet that the green energy transition, the AI hardware boom, and the next wave of medical tech cannot happen without this specific physical material, and that the system that has for decades multiplied paper claims against this physical material is now facing a persistent structural tightness it can't arbitrage away. This brings us back to the opening question. Fortress or catapult? The psychological choice. Choosing gold is choosing financial serenity. It's the asset you buy and then try to forget you own. Its success is measured in what doesn't happen. Your portfolio doesn't collapse when other things do. It's defensive wealth. In 2025, with tectonic plates shifting in the global monetary order, that defense has a compelling rationale. You're not buying it to get rich, you're buying it to stay rich. Choosing silver is accepting volatility as the price of admission for transformation. Its chart isn't a calm horizon line, it's a seismograph. It will fall harder in panics and rise faster in manias. You're not just betting on a metal, you're betting on a bottleneck. You're betting that the industrial world's hunger will eventually overwhelm the paper pricing mechanism and expose a physical scramble. It's offensive wealth. So, should you swap? The word swap implies a trade, a zero-sum game. That's likely the wrong framework. History and portfolio theory scream for balance. The castle and the catapult serve different purposes on the same battlefield. Perhaps the most prudent American strategy in 2025 isn't an either-or, but a question of allocation and vehicle. The core could be gold, physical, unencumbered, held for the long night. The tactical satellite could be silver, a higher risk, higher potential reward bet on the specific crises and innovations of this decade. And even within that, the choice between a physical ETF, allocated physical holding, or a mining stock equity adds another layer of risk and leverage. Remember the cycles. 1971, 2008. Gold moved first, a steady climb signaling the loss of faith. Then silver exploded, multiplying gains as the physical industrial reality collided with monetary fear. We see elements of both today. The steady central bank-driven ascent of gold is the first act. The potential for a violent, supply shortage-driven spike in silver is a possible second act. The unusual fact of 2025 is that both metals are telling different parts of the same story. Gold is telling the story of the end of an era of trust. Silver is telling the story of the beginning of an era of physical necessity. One is about the past's legacy system breaking down. The other is about the future's building blocks being scarce. As an American, you're positioned at the epicenter of both narratives. Your currency is the one being questioned, driving gold demand. Your technology and energy companies are the ones voraciously consuming silver. The decision isn't foreign. It's a reflection of the twin engines of your own economy: financial dominance and technological innovation. Don't look for a simple answer. Look for your own temperament. Are you the steward, guarding what you've built against unknown storms? Or are you the pioneer, willing to endure volatility for a chance at a new discovery? Most are neither purely one nor the other. Most are a blend. Therefore, the question for 2025 transforms. It's no longer gold or silver. It becomes, what is the balance in my portfolio between the guard and the gambler? Between the asset that shines because it's eternal and the asset that's essential because our future depends on it. Watch the signals. Watch the lease rates in London. Watch the monthly export data from China. Watch the registered stock on the COMEX. Watch for any mention of silver in critical mineral policy or defense production acts. The story will be written in this data. The history of money is the history of metal. And in 2025, both the oldest and the most industrially vital of these metals are flashing signals not seen in generations. It's not about picking a winner. It's about understanding that you are living through a chapter where both are, for different reasons, essential characters in the story. Your portfolio is simply how you choose to cast them. If you found this deep dive into the psychological and tangible clash between gold and silver valuable, do us a favor, hit the subscribe button. The monetary and industrial landscape is shifting weekly, and we're here to break down the signals, not the noise. And drop a comment below. Just write guard if your portfolio leans towards gold's stability, gambler if you're tilted towards silver's potential, or balance if you're seeking the mix. Let's see what America is thinking as we navigate this unprecedented year.